One of the very common current liabilities are actually contingencies, and they're a little bit tricky. So let's take a look at those. We will be talking about probability of a certain event happening, and then how do we account for that particular event. You really have three scenarios. So the first one, we will say that probability that the event is happening is probable, or that is likely to occur. So likely meaning more than 50% probability. And if we can accrue, so we can estimate the amount, then in this case, we have to accrue the amount or make a journal entry. So think of it as if we're accruing, we will write out a journal entry and we have the amount. If the event is probable, but we cannot reasonably estimate the amount, so for example, we called the lawyer and we asked, are we going to lose in a lawsuit? And the lawyer said yes, and you will lose a certain amount. So the lawyer gave us a certain amount. We're going to go ahead and accrue that certain amount. Maybe the lawyer said, I don't know exactly, but your loss could be anywhere between $500,000 and $800,000. In this case, we will accrue the lower of the two amounts. Why? Because it is more probable that we will hit 500 before we hit 800. So at least we will accrue 500,000. So again, if you have the range, we will accrue the lower part of that range. It could be also that the lawyer said, I think we're going to lose, but I cannot tell you how much it will be. In this case, it is probable, but we cannot accrue because we don't have the amount. How are you going to do a journal entry without a number? In this case, we will do what's called a footnote disclosure, and we'll look up a couple of financial statements and annual reports to see how it shows up in a footnote. The second scenario will be if contingency is reasonably possible. So it is not, so it could occur, but it's not over 50% probability. In this case, we will simply explain it in a footnote disclosure again. And then the third one is the probability is remote. So it's unlikely that it will occur. In this case, in accounting, we will ignore such an event. Very common type of contingent liability is, other than the lawsuits, product warranties. So product warranties are future costs that companies may incur when they replace defective units. And we're going to recognize cost of honoring that product warranty contracts as an expense in the period in which the sale occurs. Again, expense in the period when the sale occurs. So for example, you're buying a computer and the manufacturer says, I will include a free warranty with your purchase for 2 years. So at the time of sale, that same year, then the manufacturer will have to accrue for the liability. They're not going to split it between the 2 years because it's a 2-year warranty. Because of matching principle, it is considered to be a selling expense when it was sold, which is this year. That's why we're going to accrue both years in the current year. How does it happen exactly? So let's take a look. Danson Manufacturing sold 10,000 washers and dryers, 600 each. Selling price include a 1-year warranty on parts. We expect that 500 or 5% of units will be back for their repairs. And on average, $80 per unit will have to be spent. In 2020, the company already honored warranty contracts on 300 units for a total of 24,000. So we're going to record that as cost in year 2020 to honor the warranties. So here's your $24,000 is a warranty expense, and then another $24,000 will be going towards various accounts. For example, if it was repair parts, so maybe we had to pay cash for something, maybe it was salaries payable, etc. Now, what else? Because it's not all of it yet. At December 31st, 2020, we're going to accrue the estimated warranty that is still remaining. Okay, so we already fixed some, but we need to make sure to accrue the rest of it. So it's actually accrued in the year 2020. So we sold 10,000 units. 5% we think will be back, or 50 units. Average repair cost is at 80. So my warranty expense estimate is 40,000. I already honored 24,000 of those. So the remaining warranty that I have to accrue is $16,000 that has to be recorded as a liability in this year. How would we do that journal entry? And I want to make sure that you guys understand that this is happening in the year 2020. So when it says December 31st, this is actually year 2020 when we sold those washers and dryers. So warranty expenses debited for an extra $16,000, and warranty liability, which is considered to be current, is also at $16,000. So if you think about it, the company will report warranty expense under selling expenses in the income statement. And it was 24 plus 16, so your total will be actually $40,000 for the year 2020. And then warranty liability as current will be on the balance sheet, right? And that one will be $16,000. Okay. The following year, assuming that the company replaced 20 defective units, average cost is 80, and the company will record all expenses incurred under warranty contracts on 2020 sales as follows. Warranty liability, not expense anymore. We're going to reduce the liability for $1,600, and then repair parts for $1,600 as well. So we will not expense anything else anymore. We already expensed it in the year of sale, and now we will be just reducing our liability. Okay, how we're going to report the contingent liabilities and other liabilities for that matter. So take a look on the balance sheet. I have a lot listed under current liabilities. If you remember, they are in the order in which they're due, right? And then here's your warranty liability for any undercurrent liabilities. Okay, sorry about that, lost my train of thought. What about the analysis, those famous ratios? So we have two very commonly used ratios. They both test liquidity, so ability to pay maturing obligations when they become due, right? So the first one, very common, is called working capital. So how much do you have to work with? And it will be current liability, current assets. Be careful, current, not total. Common error. Minus current liabilities, again, not total. So here's your working capital. Okay. And then current ratio. So very similar, and it's basically a variation of the same ratio. When you take current assets and divide them by the current liabilities. Remember, no averaging in this case. Why? Because both are on the balance sheet. So they're both in the same time period at the end of the year. Okay, we're done for now.